Carnival Corporation offers cruises in many different countries. I know AIDA, it is very big here in Germany, I didn't know it belonged to them. Their stock crashed during the pandemic. The cruise industry is recovering, and it already has recovered to pre-pandemic levels. So with Carnival stock not being back to where it was before, maybe it's now a good time to look at. They did issue a lot of shares during the pandemic, and they took on an enormous amount of debt. And that's because revenue basically disappeared overnight. But we can see revenue is already back, and when we look at the last few quarters, it has been above where it was before. The company is saying that bookings are still doing great. They're basically fully booked out, and that they currently see no signs of slowing down from customers. Plus, they're achieving this occupancy percentage while increasing capacity compared to 2019 by 7.1%. So capacity is up, plus the prices they charge customers for each of these trips is up, while costs are only up between 7%. So will they be able to pay off this enormous debt? Well, we can already see they're paying it off by around 300 million per quarter. Meanwhile, their free cash flow has recovered. This doesn't include the latest quarter, but we can see they also made $1 billion in free cash flow right here. Despite the high seasonality, the last quarter, which is usually a bit of a weaker quarter for the company, has been very strong. I don't expect the company to drop much below 1 billion per quarter in free cash flow. I think it's gonna hover around 800 million average per quarter right now, because the demand is just so strong. People are willing to pay a lot for these cruises, so as long as they're fully booked out and continue to have these high prices, I think 800 million per quarter is very reasonable. Meanwhile, their interest expenses on the debt is around 500 million per quarter, currently going down towards 400 million because they are reducing it this much. 400 million to 500 million, what's left over from the free cash flow, 300 million, this is what they're using to pay down that debt. They're doing this while having great cost control, they're not having one-off spikes like before anymore, and they managed to stop the dilution that happened after 2020. They're now able to pay off debt without having to issue more shares. But of course, when it comes to debt, there are two things. One, paying down the interest, and two, refinancing it. But when we look at the payments they have to make, we can see most of the payments are gonna come after 2025. Now, will they be able to pay off a lot of this? Yes, they are. But for example, when it comes to the 6 billion, the 9 billion here, the 4.1 billion, they're not going to be able to pay all of it off. So will they be able to refinance? Currently, most of our debt is around 6 to 10%. Well, here we have one bond, which is maturing in 2027. So this is around the time where most of the debt will be maturing for Carnival. So this bond should give us an estimate of what the market thinks of Carnival. Well, it is currently trading at 95. If you don't know anything about bonds, 100 is basically the bond being at full value. If you get this bond, you will currently get 7% until maturity. So the market currently would loan money to Carnival for around 7%, below or in line with the other debts. They would probably be able to easily refinance this, and Carnival is mostly paying back its high cost debt. So now they're growing revenue and free cash flow again while paying down the debt. This is gonna take a few years to pay down. They pay around 1.2 billion per year right now. If nothing changes, I think they can accelerate this soon once the free cash flow starts coming in again. Because remember, free cash flow has only returned recently. So I think they're gonna pay more than 1.2 billion back, but I want to be conservative and just say 1.2 billion for now. And I do not see anything playing against Carnival right now. Fuel prices are already very high, so they're achieving this with high fuel prices, so costs will not skyrocket anytime soon. If we go with the average of 800 million per quarter in free cash flow, which I said, that would be a free cash flow per share of 2.53 per year. Let's call it 2.5. Historically, the company grew at 5% before the pandemic when it comes to revenue. But if we look at the shareholder returns, which means the money that they have paid out either in dividends or in buybacks, we can see before the pandemic, they have bought a lot of shares back and paid a lot of dividends out, between 2 and 7%. So if you're saying, oh, they can't grow because now they're using all their money to pay down debt, well, before they have been using all their money paid out as dividends or buyback shares. So that is not a valid argument. The company is going to be able to grow. 5% revenue growth, which is just the normal revenue growth they had, translating into free cash flow growth for the next 5 years. But then, once they pay down enough debt, they will start buying back shares. In 5 years, they will have lowered their interest expenses by a lot, at which I think they will be able to return to normal. Let's say they buy back 3% of shares after that. Especially if shares stay at this very low valuation. And let's say they pay out 40% of their free cash flow, just like before, with a small deduction due to taxes. Well, then we would come to an intrinsic value of 28.48 per share. It's currently trading at 18.54, so that is a 54% discount. Now, what if it goes a bit better? Let's say revenue growth is a bit higher. Nothing major. And a slightly higher valuation. Well, then we come to $36 per share. Let's say they're not able to buy back shares, and growth is going to be a bit lower. Even then, with a multiple of 12, we would still be at $20 per share. We would still make 10%. It is a more risky stock than others, but the debt is well covered. I will definitely put it on my watch list. If there's a dip again in the stock, I will definitely buy it, but for now, I'm just gonna think about adding it to my portfolio. What do you think about the company? Write it down below. Have a good day.